Hey Nick, so that's a great thing that you put together there. You know, taking the Bloomberg article, and I think there's been some better factual information coming down from Bloomberg lately, which I appreciate. But when you take it down to what it is, you don't know the players without the scorecard kind of thing. But and they oftentimes, you know, market players are market players, and if they're central banks, they're still market players. So it gets you down to what are the central banks? What are the central banks? And when we talk about this crisis, and when we talk about the dollar, and we talk our currency, when we talk about everything that's going on, what has been the role of the central bank? So let's take our central bank as the first one, which is to say our central bank, the actions of our central bank, or the inactions. The lack of failure of regulation, the failure of setting up proper signals with regard to monetary policy, cause this financial crisis. There's no other body, the body in the United States of America that is charged with preventing financial instability is the Federal Reserve Board. Okay? So their failures cause the problem. Their solutions are causing the next problem. Interestingly, how Anna Schwartz, came out after Bernanke said, we won't repeat the problem. We, the present Fed, will not repeat the problems of the Fed of the 1930s, the Mariner Eccles Fed. We won't repeat those mistakes. We will make sure that we use all the tools in the toolbox. So we're creating, hundreds of billions of dollars of excess reserves for our banks, trillions of dollars in guarantees and other mechanisms by which we're putting money out into the economy. And that includes hundreds of billions that we're sending to the central banks of the other countries. So when we talk about that aspect of the situation, I think it's really important to keep in mind that these central banks are private entities. They are private banks. They are private bankers. Okay, they're not the government of England. They're not the government of France or of Germany or of Sweden or of Switzerland. They're the private bankers of those countries. They're private central bankers of those countries. And those are the guys that Bernanke, in making sure that he doesn't repeat, the the monetary contraction that actually did happen in the late 30s. And if you look at the politics behind why that happened, you realize that some of the people that are out there now calling for, uh, you know, basically the destruction of the economy so that we can work it out. Those were the people who called for. Those same people were the ones who called for a reduction in government deficits and therefore a reduction in the money supply. And so that was the cause of the problem back then. Continuing the depression, extending the depression. But what type of socioeconomic policy was it? And that's where you have to go back to where we are now. Bernanke's expansionary, policies. Quantitative easing without a policy. It's part of the problem of having private central bankers independently running the economy. Because what is quantitative easing? How do you decide what it is? You take a look at what happened in Japan, for instance, where they have a much larger government presence in the Bank of Japan and in the monetary policies of the Central Bank of Japan. Okay, what you see is that they had to bring forward a proposal to do quantitative easing, and to state how large it would be and what the expected results were from having doing quantitative easing. It wasn't a matter of one day they're creating 100 billion and then it's 200 billion and then it's 500 billion and then we get permission to do this, that, and the other thing without having a quantitative easing policy. If you don't have a quantitative easing policy, and you have quantitative easing, which is what we have now, then you really have no benchmarks. You really have no marks, for success or failure of the policy. So, that's how Bernanke gets by. He gets by with his, well, we're independent, you say. Because we're independent, we're not answerable to anybody. And by not being answerable to anybody, he's been able to take the money supply of this country, the monetary system of this country, and the money supply of this country, and send it overseas, and send it to those central bankers of all those countries that are doing what? What are those private central banks of all those countries doing now? They're destroying our money system. They're destroying our currency. Okay? Now, excuse me. We talk about the depression. When we talk about the depression, mostly we talk about the effects on the people. That's how we look at the depression. What's the story of the depression? No, it's the Dust Bowl. It's the jumping on the train and getting out, and we'll work for food. It's the terrible, terrible, terrible impact on the humanity of it. And now when we're talking about all these problems, all this financial system, we have financial system problems. Everybody wants to know, how's the financial system doing? Unemployment, lack of employment, lack of wages, lack of benefits, lack of government services, losses of pensions, loss of housing. That's the story of this recession, not yet a depression. That's the real story. And, the ones that caused it at the Federal Reserve, in my opinion, they're the ones that caused it because they failed to prevent it. It happened on their watch, and they are running the money system. And if this is not a failure of the money system, we need to go back to school about what is the money system. But having said that, all this information, Nick, is great as far as it goes. But it's not enough. Knowing what's going on is not enough. Knowing what's wrong is not enough. Being right is not enough. We got to change the system. We need a new monetary system. Okay? We need a new central banker who is beholden to we the people. Okay? That has to present, what it is that they're doing as a matter of policy to our government, so that our government can be held responsible for what's going on with the money system, instead of them all sitting up there going, well, we don't really know what's going on over there. It's the Federal Reserve, and they are independent. You wouldn't really want us getting involved in saying how much the money supply should increase next year in order to have monetary, financial price stability and full employment. You wouldn't want us to be involved in that. That's the Federal Reserve's job. We need to fix the money system. Without fixing the money system, the grandkids will be back here doing this whole thing all over again. So the information's great, but we need some accountability for what's going on with the money system, and the system that we have now does not provide it. Thanks, Nick.